We are here at the Finance Watch office in Brussels. Thanks a lot for logging in. It's just 1 o'clock and we start the second webinar about the campaign that we launched a bit more than a month and a half ago for the 15th of September, the 5th anniversary of the crisis that started in 2008. About 2 weeks ago, Benoit was here with us and we talked about the problems behind the regulations that were put in place. But today, we're going to concentrate for 30 minutes about all series of solutions that Finance Watch is basically advocating. And the first question I want to ask to you, Benoit, also there are 4 problems and 4 types of solution. The first one is that finance makes the rule. What is your point of view about it? And do you really think that there is strategies or ways in order to get a more democratic and accountable system?
Mm-hmm. So basically what we discussed during the first webinar was the whole background analysis of Finance Watch on what we call the status quo life cycle. And our analysis is that the proper efficient solutions have not been put in place after what was the biggest crisis since almost 100 years. The root cause for that we assess is that we are still in a paradigm where it is assumed that the financial industry left to its own rules, so with a model of self-regulation, will by nature or automatically produce benefits for the whole of society, which might sound a bit surprising when we read the news every day, but nevertheless that's still the paradigm where we're in, and that means that regulators, elected officials, or at least many, if not most of them, still think this way. And so there's a big what Simon Johnson calls the fear factor, mm-hmm. which is that whenever elected officials are thinking about taking the proper decisions, and that's what we're going to discuss today, effective solutions, there is this wall of fear that is, well, if I do this, if I really bring change within the financial system, maybe they will not manage to finance the economy anymore, so it is going to damage growth, create more unemployment, etc. Mm-hmm. And so that is why the first thing we think needs to be done is to put society back in the driving seat of financial regulation and of the financial system in general.
You pushed one idea that I think is extremely interesting when you mentioned that we could have something like a citizen dashboard. It seems to me it's very interesting, and at the same time I have some doubt about it, in the sense that people say that the financial system is so complex, and so opaque. So basically I like the idea, and at the same time I wonder, but is it really feasible, to have something like this? So I guess that at Finance Watch you discuss this. So what do you have to say about this potential problem that could have such an idea?
Mm-hmm. I think, so what we just said is that it's really important that civil society and citizens in general wait in the balance and really go back to the driving seat. It's a complex process, but I think the first thing for that to happen is for people to understand, and I think in a way the crisis really helped that, is for people to understand that whatever their focus is, and for most people luckily the focus is not on the financial system, understanding it, regulating it and so on. There are much more exciting stuff in life, such as all the different challenges that society faces today in terms of in the environment, climate change, education, mm-hmm. Infrastructure, commuting means and so on. For all these exciting challenges to be met, we need to address the problems within the financial system, because it has such a weight in the real economy, and it has such a weight on society today. So I think that's the first thing to motivate people to turn to the financial system and really push so that we do something. Now after that, it's true that there is a barrier, which is the complexity of the current system, the opacity of it, and so basically the general lack of understanding. And that's why we think a really common sense measure, which is a dashboard, which is very similar to the dashboard that any management team in a private company needs to have when it goes to meet the board of director every month. They must have this one pager indicating to board members how the company is doing in terms of, there's always three elements. The first one is benefits. Where do we stand with benefits? In this case, it would be from the point of view of society. So what are the benefits from the financial system to society? Let's discuss that in a moment. And then we have the risks. So what are the risks that the banking system imposes on society? And then you have the costs, which is what does it cost for us to maintain the financial system, and is it in balance with the benefits that we have? Now, the citizens dashboard just the design of it would be an excellent exercise to engage people into defining what are the benefits we expect from the financial system, what are the risks, bringing light to the risks it poses to society, and also the costs, because we have shown and we have discussed that last time, actually deregulation has increased the cost of the financial system, contrary to what we think. So these are important indicators, and we would encourage as many civil society organizations to engage, the members of Finance Watch and others, but also citizens to contribute to defining these indicators and potentially the benefits that the financial system brings to society, for example.
Here, if I may, because we just got a question from Jennifer, who goes directly, it's a question about this topic. She said that in the UK, although people are very angry about what happened after the crisis, that this hasn't resulted in letters to MEPs, for example. So she's asking if Finance Watch have thought about a way to create a stronger citizen engagement. Here, maybe from my perspective, I think that the point is very interesting. Now, Finance Watch is also a network. If I'm not wrong, you have many members. These members have also access to large amount of citizens. So if you would start something like a citizen dashboard, I guess that you would probably work hand in hand with your members. What have been their answer to your suggestion?
No. So indeed, Finance Watch is also a network of a lot of civil society organizations, and so I would say the example here was individual letters to members of the European Parliaments or members of the national parliaments. I think in this area we will touch only a very small number of people who really have, I would say, the motivation and the time to take these very strong actions. But in general, I think it's important that all citizens do realize the importance to change the financial system, and whatever organization they are involved in, or even I would say in the professional environment, that they make sure that these issues of regulating the banks, having more transparency, and basically changing the financial system is on top of the agenda. Even if these organizations people usually participate in are not directly related to finance, but and they have probably more exciting goals that I mentioned earlier. But it's important that everyone understands that as long as we don't change the financial system, these more exciting goals will not be met. So it's not only letters to MEPs; it's also making sure that many civil society organizations have this on top of the agenda, and Finance Watch can then act as a catalyst and bring expertise to make sure the right advocacy or lobbying is made in Brussels to have our solutions pushed.
Yeah, a question from Joachim. Is asking if there are already any suggestion about the indicators that a citizen dashboard could have.
Well, I mean, there could be many, and we want to make sure that citizens and civil society organizations are as much involved as possible in the definition of these indicators. So what we definitely don't want to do is for Finance Watch to say finance should serve this and that purpose, and so we're going to define the indicators, and because then it wouldn't really be a citizen's dashboard, it would be a Finance Watch dashboard. But I mean, obviously, when you look at the benefits of the financial system, for us, some key indicators would be where does the money go? So where is the money invested? Mm-hmm. So what do banks do with the money that you have lent to them or deposited with them? And that is today very obscure. So that would be, in the benefits, I would say we would definitely have as an indicator the proportion of bank activities that relate to long-term investment in infrastructure, and possibly includes ESG principles, so environmental, social, and governance principle, to make sure that it's also responsible investment and not just long-term investment in the tobacco industry, for example. Mm-hmm. So, if you look at the quality or the benefits indicators, it would definitely be in the range of where do banks invest their money? Do they really support the real economy or not? That would definitely be the sort of indicator. Yeah, and I would just add on the dashboard, it's really important that we want to make this dashboard something that is endorsed by the regulators. So you will find other civil society organizations, some of them members of Finance Watch and very efficient, that define their own dashboard. So based on their own criteria and own definitions, they will publish a sort of ranking of banks in terms of do they behave correctly, do they invest in responsible areas, do they take too many risks and so on. We want to engage with the legislators, the regulators in Brussels and possibly internationally to agree on what the dashboard would be at an international level and make it a public citizens dashboard, if I may say. And just to finish and to add a layer to this idea, this dashboard is the prerequisite to have a really, again, efficient, and it's common sense in any private industry, to have a dashboard of the financial reform. So in 2008 and 9, after the crisis, the G20 said, okay, we're going to change finance. The problem is that it's very difficult to see the clear objectives of the reform, and not even mentioning the indicators that allow to measure the progress of these of the G20 agenda vis-a-vis these objectives. So this is, again, it should be common sense. It's not there today. So again, you could say we want to reroute the investment from the banks to the real economy. Well, sure, but then you need the indicators that show you the performance of each bank vis-a-vis this objective.
Hans wrote asked a question. He likes the idea basically, and he said, "What is your stand on capital movement controls, minimum holding periods, and other measures? Do you think that this could be part of such a dashboard? And what is Finance Watch already working on these issues?"
Well, the thing is, we're in a situation today where we completely deregulated the activities of banks. So basically, we tell banks and investment funds that they can invest wherever they want, but also in terms of activities, and we come to that in a second. There is no restriction on the types of activities that the banks can engage in, even if they do hold the key functions for society to collect the deposits, to allocate credit, and to maintain the system of payments. The same entity is allowed to do many different activities, and it's true that at the same time we completely opened or freed the movement of capital. So I would say this: it's you create a situation where it becomes very difficult today to incentivize a bank or private capital to invest in a certain area, because basically, if you look, capital can go anywhere in the world, and there are places in the world where there's very little regulation, where labor is really cheap, and so the return on investment will be really high. So now, how do you go back and incentivize, for example, European money to be invested in Europe? That's a really difficult question. We don't have an answer to that, but it's part of the discussion, yes.
Well, you were mentioning about the incentives.
Yeah.
And this is probably also linking to the problem and the solution of the problem 4 that you mentioned, no? That we have a society that looks very, very much in the short-termism, not looking in the long-termism.
Well, I guess the first, and then we come to our second most important solution after putting society back in the driving seat, which is to slim down some of these mega banks. It's that today there is a subsidy, an implicit subsidy to speculative activities. So the first thing, common sense thing to do, is to remove the taxpayer's subsidy to speculative activities. So today, the largest European banks, but it's the same thing in the US, finance themselves rather cheaply, based on the fact that investors that lend them money or that invest in their capital know that state and public authorities will come to the rescue of these banks if they make too big losses. So again, the issue of separating activities within banks is to isolate the activities and the functions that are crucial to society, namely collecting deposits, allocating credit, and managing the system of payment. Society cannot go one day without these functions. So you do have to have a public guarantee on those activities, so that if a bank fails, we will protect these crucial functions. But the rest of it, which can be useful also, but is not vital, meaning society can go a few days without it, or there's sufficient competition so that if an investment bank having all these investment and market activities goes down, a competitor will basically replace it. We need to separate these activities so that the funding that the first bank receives remains cheap, but that for all the speculative activities of the investment bank, basically the investors will say, well, you're taking risks, you do not have the guarantee by the state, so I will be very careful when I lend you money, and I expect a high return on investment to compensate for the risk I'm taking. So this measure would structurally and naturally, and I would say automatically, because it makes a lot of speculation just economically not viable, so it kills the business model of a lot of speculative activities. So that's why it's such an important measure. It's not just about a moral judgment of some activities that are good or bad. It's about a common sense measure to make sure there is no taxpayer support to non-vital functions of banks.
Mireille asked something about the Glass-Steagall separation of credit and investment banks. What's the point of view here about this from Finance Watch? The separation between banks, is that something that could be useful for you in order to solve one of the four problems that you mentioned?
Yeah, exactly. So as I just mentioned, it's a key measure. It's really at the source. These too big to fail institutions, which are, by the way, also too complex to resolve when they go bankrupt, and they are also too interconnected, so that you are obliged to save one, because otherwise you will have a domino effect that many others will fall. This is really was at the heart of the crisis. Definitely at the heart of the fact that citizens had to come to the rescue of these banks. So it's the main measure for us in terms of structure of the financial system, and well, it is on the table actually in Europe, within the European institutions. It has been on the table in the US as well, but so far it's definitely not about reinstalling something like the Glass-Steagall Act. It's something much weaker and less ambitious that is currently being discussed. So one of the main campaign themes of Finance Watch during the next few months is to make sure that the next Parliament and the next Commission, so we're talking summer and autumn of 2014, have high on the agenda the request to strictly separate the activities of banks between the core and vital to society functions and the less core, sometimes useful but mostly speculative activities that should not benefit from a taxpayer's guarantee and that should not be subject of rescue in case of failure.
Mm-hmm. I think it's even Mario Draghi, no, that said that after the crisis of 2008, what's interesting is like we have big banks that got even larger because of the fusion that followed the crisis. I mean, if this is true, then are there other recommendations that you are pushing?
Well, I mean, again, the fact that these banks are too large is part of this vicious circle that because they have cheap money based on the implicit subsidy they have, it's an incentive for them to develop activities, speculative activities, and then become even bigger, and then the public subsidy grows because basically the amount of taxpayer money that would be necessary to save them grows with the size of the activities they have developed. So there is a vicious circle there that you can cut by separating the investment bank from the commercial bank and the core activities. Mm-hmm. Now, of course, there's a lot of other much more concrete measures that you can take. If you look, for example, at the activities of these banks on commodity markets, you can limit the amount of speculation or simply positions that these banks take on these markets to make sure that these markets remain at the service of end users, which is basically producers of commodities, agricultural or other, and transformers of these commodities, and not that these markets are dominated by speculators. So there's quite a lot of much more concrete measures that are being discussed in Brussels and that we try to push to make sure that the focus of the financial system is less on excessive risk taking and the structure is not incentivizing risk taking, but also that the short termism, which is just a main feature of the system today, moves to a more long-term approach of investment.
Mm-hmm. Question here from Stephanie. That's very interesting because here we see the double level of European regulation, the national and European level. So she said that in France, the minister has kind of a double hat. He supports the bank separation at the national level and criticizing it at the European level. So what's the most effective level of action to put pressure to separate banks?
Well, for citizens, the most obvious and the most efficient pressure they can have is really at the national level. So, when European leaders meet in Brussels, they come with their own agenda, and their own agenda is determined based on the pressure they feel from citizens, right? These people want to be re-elected, and so they want to make sure they address the key concerns of the population. So it's really at the national level now. If we go back to the French example, it's a bit more complex than that, because the law that was passed in France, which is a so-called separation of activities law, is very, very weak. So it has very low ambition. One of the CEOs of one of the two largest French banks said that it's about 1% of the activities of its current activities that would be isolated by the current law. So it's really separating very, very little. So that's actually sending a message to Brussels, as to the ambitions of France in terms of separation. So I'm afraid there's a lot of coherency usually between the national and the European level. Now, of course, the European level is always the best, because then you kill the arguments of the banks that if you do it in one specific member state, then you will damage the competitiveness of for example, the French banks against the UK banks and so on. So it's definitely at European level that the rules should be defined.
Mm-hmm. Well, I see there is only 5 minutes left, but Mireille is asking a question about has Finance Watch any proposal for action for making the taxpayer voice heard? I think this probably is back to what you said at the beginning of the webinar with the citizen dashboard. There is the campaign that Finance Watch is currently pushing. This is probably some tools that are on the table. Don't know if you have anything to add on this question, or if you would like to jump to another point that we haven't discussed today.
Well, I'll be a bit provocative in my answer, and I would say self-serving. So I'm sorry in advance about that, but Finance Watch has existed for 2 years, and we've got quite an audience within what we call the Euro bubble, which is the policymakers from the Commission, the Council, and the Parliament. So also because we are the only one on the other side, so you have the financial lobby on the other side. You do have a few consumers lobby, but Finance Watch is one of the very few to really look at the system in its entirety and defend public interest. So we do advocacy. We have the technical expertise, because we are composed almost exclusively of professionals from the financial industry, so we have the same level of credibility with policymakers. So we managed to create quite an influence, but it's only 12 of us for the moment, and we should be at least 25 and possibly 50, and that's in Brussels, but also we should be able to influence the debate in the different member states. So, well, you see where I'm going. We need more support, and we need to grow the team, and that's as other NGOs in other fields such as environment or other concerns have grown very big, and they've been able to set the agenda. It's only going to become possible as Finance Watch grows. So that's why we try to reach out for a wider audience. But also at some point, people have to realize, like they do realize with other NGOs and civil society movement, that we need very concrete support, because obviously we refuse any sort of funding from private interest or the financial industry where the money is. So we need support from citizens to grow the team, to develop our actions, and to become more present in every member state in Brussels, and to have more means to do empirical analysis, to collect data, to lead campaigns, and so on. So it seems obvious, but it's really important. The story of Finance Watch, this is only the beginning of the adventure, and we need citizens' support if we are going to become an NGO comparable in size to some other very big NGOs that you all know.
I think this ends our second webinar about the campaign that you launched on the 15th of September. I would invite everybody to come on the website, find information. This webinar has been recorded, and the first part of the webinar, as well as this one, will be available soon on the Finance Watch website. Thanks a lot for attending this webinar. Thanks to you, Benoit, for being here with us too. Feel free to contact Benoit if you have precise question about one of the topic. Finance Watch is also here for that. I wish you an excellent evening and see you soon for the next Finance Watch webinar. Bye bye.